If you use your car for work purposes, there's a good chance you'll be able to claim a deduction for it in your tax return. This is an area that has seen a recent change to the rates that you use to claim this, so it's more important than ever to be on top of this so that you can maximize your claim. The first key question you have to ask yourself is, when can you claim car expenses? What constitutes a work-related car expense? Now, we are lucky that the ATO do make this relatively clear. They have a few key guidelines that you need to tick off. So your vehicle must meet the definition of a car, you must own or lease the vehicle, and the expenses must be for work-related trips. You must have spent the money yourself and weren't reimbursed, and you must have the required records. So we should break down each of those things to understand what they mean, and then we can look at which method is best for your situation. Now, first we need to look at what the definition of a car is. The ATO do provide some good details here, and it is quite a simple one because a car is a motor vehicle that carries a load of less than 1 ton and fewer than 9 passengers. They've got a whole bunch of other information here, but that is going to be the main thing that people look at to determine, is their vehicle a car? The next one is, do you actually own this car? And this is an area the ATO will look at when determining, can you claim car expenses for that car? Now, let's see what they say here. So they say that to claim car expenses, you must own or lease the car or hire under a hire purchase arrangement. You can't claim car running costs for a car that you use under a salary sacrifice or novated lease agreement. The other thing that they state is, if you use a car owned by a family member and you can show there is a private arrangement that made you the owner or lessee of the car, you can work out the car expenses as if it is your own car. So they're the key things that you need to understand when it comes to, do you actually own that car? And then, of course, the key thing that we need to determine is what constitutes a work-related purpose. So again, the ATO state that you can claim trips between workplaces or to perform your work duties. You can't claim trips between home and your workplace. And that is the real key one that people get confused about, is that you cannot claim if you're just simply traveling between home and your workplaces. Now, there are some exemptions to this, such as carrying heavy tools, or maybe you've got an unusual starting place for your work. You really need to do your own research into this because everyone's situation is going to be different, and it is an area that ATO are really strict on. So once you've determined that yes, you can claim car expenses, you need to decide which method is going to maximize your return. And we have 2 methods to pick from. We have the cents per kilometer method, and we have the logbook method. Now, the great thing is you can calculate both of these and then determine which one is going to maximize your claim and use that. So let's first look at the cents per kilometer method. And this is the more simple of the 2 methods. And it is simply, as the name states, claiming a cents rate per kilometer you've traveled for work purposes. So we need to work out, what is our work-related kilometers? What is the current rate? We times those, and that will get our claim that will go into our tax return. Now, this rate has changed for the 2023 year, and it is going to change again for the 2024 year. So the current rate is set at 78 cents per kilometer. Now, under this method, we have a maximum amount of 5,000 kilometers per car that we can claim. So this caps our claim at a maximum of 5,000 kilometers by our 78 cents, which is going to get us a claim of $3,900. Now, this is up from those that were claiming the maximum amount in the prior year, which only got them to a claim of $3,600. So it's an extra $300 this year. Now, you can't just claim the maximum amount. You need to work out the actual work-related kilometers for your car and then claim that. And this is because the ATO's record keeping requirement requires you to have some kind of calculation as to how you've worked out how many kilometers you've claimed. So some of the options might be to have it in a diary, or maybe it's in your calendar, or maybe you're using the ATO My Deductions app where you're logging your kilometers in there. Whatever your method, you need to come up with how you've calculated your kilometers and ideally have some kind of proof of why those kilometers happened. The cents per kilometer method is very simple. As long as you've got that record of how you've worked out your kilometers, you know what the rate is set by the ATO, and then you can work out your claim. And it can be something that's easy to work out at the end of the year, but ideally keep track of it ongoing so you don't miss any trips. It is great for a lot of people, especially those that are doing under 5,000 kilometers. But again, we're going to talk about the logbook method in a minute, and you want to compare the 2 methods to work out what works best for your situation. Now, before I talk about the logbook method, make sure you've hit that subscribe button because I've got the goal of hitting 10,000 subscribers here on the channel. I've been putting out lots of videos over tax time to help you maximize your return. Now let's get back into the video. The other method that we have to choose from is the logbook method. Now this is the more complex of the methods, but it can sometimes result in a lot higher claim because there is no cap on it like the cents per kilometer method. The logbook method at its basics is us claiming the work-related percentage of our car expenses. So instead of claiming by number of kilometers, instead we're going to claim the percentage of all of our actual costs. And to do this, we need to do a logbook. So our logbook needs to be done for a 12-week continuous period, and that logbook will last us for a 5-year period. So let's have a look at what the ATO say about logbooks. And your logbook must cover that 12-week period, include the destination and purpose of every journey, the odometer reading at the start and end of each journey, and the total kilometers traveled during the period, and include the odometer readings for the start and end of the period. Now, while it is valid for a 5-year period, the ATO do want to see you in the following years have your odometer readings at the start and end of the full period that you claim, and your work-related percentage from the logbook. So the logbook method is a little bit more record keeping, especially in that 12-week period. And it is more record keeping in the ongoing period because we now need to get the actual expenses for our motor vehicle. Now, our actual expenses could include things like fuel, registrations, insurances, repairs, interest on any loans you've got attached to the vehicle, and the decline in value of the vehicle, otherwise known as the depreciation. So we need to know the actual cost for all of these things. So we can't just estimate these things because we need to know the actual cost to be able to times that by our work-related percentage of that vehicle to get our total claim. So when it comes to record keeping, we're going to need all of our receipts for all of these transactions, as well as our logbook. So this is a bit more strenuous compared to the cents per kilometer method. So you're really going to make sure you have a record keeping system for your receipts. I talk about it all the time on the channel. Is it going to be Dropbox? Is it going to be Google Drive? Is it going to be the ATO app? Or have you got some other system where you're collating your receipts ongoing so you're not going to lose them or forget about them when it comes to the end of year? Now I'll go through a bit of an example with you. We've got someone, they've done 1,000 kilometers during their logbook period, and they've worked out that 750 of them were for work-related purposes. So we've got a 75% work-related purpose of our vehicle. So this means we can now claim 75% of our costs. So we might go through all of our costs throughout the year, and we have $8,000 in total expenses for our vehicle. So we're going to claim 75% of that, which is $6,000, which is going to be our claim. Now we can see we've obviously done over the 5,000 kilometers. So if we were using the cents per kilometer method, we'd be capped at 5,000 kilometers, which would cap our claim at 3,900. So in this situation, we're going to go with the logbook method because it's going to give us a greater claim. Now, this isn't going to happen every time. You need to understand which method works best for you, and that is going to be by doing the calculations for both, seeing which one maximizes your claim and using that for your tax return. Now, while I'm talking about maximizing your claim, I've put together this playlist, which is a bunch of videos I've done that are all about tax tips for individuals that are looking to maximize their return. I'd love for you to go and check that one out.